welcome back. Let's take a look at futures this morning, where we are looking at a mixed market. Dow Industrials now up about 8 points, but the Nasdaq is down 75 after all-time highs were reached yesterday. Look at this market momentum underway after the Federal Reserve cut interest rates by 50 basis points for the first time. They cut rates since March of 2020. The Dow Industrial soared 522 points yesterday at 4 o'clock on Wall Street. That was 1.25%. The S&P was up 95, and the Nasdaq was up 440 points. That was 2.5% higher. The Wall Street Journal's Nick Timiraos writing that the Fed now faces new obstacles with this big rate cut, as officials are trying to balance two risks. One is that they drag their heels on reducing rates in a way that gives rise to rising joblessness and makes officials rush into bigger cuts. And the other risk is that they move too fast in dialing back rate hikes. Joining me now is Andersen Capital Management's Chief Investment Officer, Peter Andersen. Peter, your thoughts. Good morning to you. What is your reaction to what we've seen this week?
I am actually totally surprised, Maria. Like most investors, I was expecting maybe 25 basis point cut. But the 50 basis point cut has just introduced more ambiguity into the Fed's position. I mean, on one hand, the Fed is saying the economy is great, the job market is great, we're under total control, and then to do an alarming 50 basis point cut sends a totally opposite signal. So I think investors are going to wrestle with, we're not done yet thinking about this, thinking through this, and getting a sense of what his next steps are. And he's actually kind of painted himself in a corner now, because at the next meeting, what will he do? Will he continue with this aggressive position, or will he have to dial it back, which will actually impair his credibility?
Now, I mean, look, you call this rate cut alarming. What's most alarming to you? Do you worry that with a large cut of 50 basis points and then another potential 50 basis points coming later on in the year, that it stokes inflation back near the highs? Because, you know, it's not unheard of that we get a second spike of inflation. Jason Trennert has been on this program with his research saying that when you do get something like a spike of 6, 7, 8, 9%, which, of course, we did get 9.1% was the high, you typically get a second spike. So if you cut rates aggressively, does that, you know, sort of risk a second string of inflationary moves?
Of course it does. And the other thing is, you know, how much headroom does he have to do this? We're not talking about cutting rates from a very, very high average position. I mean, we were relatively low to begin with. I know a lot of viewers out there are thinking more anchoring on the past 10 years. But if you go over historic levels, you know, we are cutting rates from a much lower average level. So that doesn't give him a lot of margin for error. And the fact that he is being ambiguous about this, you know, the capital markets operate on credibility. And if we start questioning the Fed's credibility, then that weakens the whole picture also. So I am very concerned. And lastly, I was never in the camp, if you recall, of having a rate cut at all. I thought we should continue going along this path for maybe 2 or 3 more quarters. I thought we had plenty of time to do this. So can you imagine my reaction to not only just the 25 basis point cut, but the 50 cut?
Yeah, and of course it has also stoked criticism that it's all political. And the fact that you've got an election 46 days away and you've got a Fed that's cutting rates much more than most people expected. I mean, there were a few people who expected 50 basis points. Jeffrey Gundlach did, Ed Hyman did from ISI. But still, there's a lot of calls that now it's political. And everybody's trying to say, no, it's not political. In fact, yesterday, President Biden falsely claimed that he's never met Fed Chairman Jay Powell, the man he appointed. Watch this.
And unlike my predecessor, I respect the Federal Reserve's independence as they pursued its mandate to bring inflation down. I've never once spoken to the chairman of the Fed since I became president. Jay, the floor is yours. You're over this side.
Mr. President, thank you.
It's just he's never spoken to him, and then we have the video that he introduces him right there, Peter.
Well, you know, maybe he's mincing words or dissecting words. Maybe his term spoken is some other definition that we're not familiar with. But of course, it's unambiguous that he has actually spoken with him, which again kind of focuses us on the credibility of this relationship and what we hear from both those officials. Remember, he has hire and firing power over the Fed. So by its very structure, there is some influence there, major influence. And for us to think that they don't speak to each other is really very naive in these modern times.
Of course, of course. John Lonsky, you weigh in here. Your thoughts?
Well, you know, what strikes me as being somewhat odd is that despite this half of a percentage point cut in the federal funds rate, what does the 10-year Treasury yield do? It actually edges
it's a great
higher.
point.
You know, it was at 3.67% before the rate cut, and now it's up to about 3.72%.
Yeah.
And that tells me that the bond market is concerned that this is too aggressive a move by the Fed, and that this latest rate cut very much risks a faster rate of inflation than otherwise in the future.
It's a great point. Peter, did you notice that? What happened with the bond market after the Fed cut rates? I mean, they went up.
Absolutely. And, you know, it was a head scratcher to me. And I actually went back to look at the relationship between the overnight rate and the 10-year Treasury. And it does often fluctuate, you know, relative to each other. But the fact that it's like that now, you know, what they try to do is have the Treasury lower than the Fed rate, because that will encourage people to borrow more at the Treasury rate than the federal banks. But it's the opposite right now. So I think it's another data point that's showing we are confused. Certainly there was a welcome rally yesterday, but I don't think that that rally has legs, because it's more of an interest rate driven rally. And those, in my opinion, tend to fizzle out. We need a rally based on fundamentals, not necessarily a 50 basis point cut.
All right, Peter, good to see you this morning. Thanks very much for your insights on all of that. Peter Andersen joining us this morning.